please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata. With me are Anuj and Sonia. It quite clearly appears that President Trump is in a mood to cover shorts. While 3 days back or last week, the desire was to perhaps profit from longs, and therefore there was a threat of a tariff hike. Today, the tweet says that the tariff hike is if NAFTA is not renegotiated. Basically, the global markets, which were anyway looking for a reason to cover shorts and recover, took this as a hint that, yes, there is some scope for renegotiation. And we have seen this wave of risk appetite even before that tweet came in, incidentally. Even the destabilizing results in Italy did not bother Europe. And today we are seeing that wave of risk appetite both in on Wall Street and in Asia. Actually, yesterday, the way the Indian Nifty Bank behaved and the private banks behaved, it did look like the Indian market also showed signs of exhaustion of selling and perhaps some renewed buying. So it looks like the bulls are in for a good day today.
Oh, hopefully. Let's see whether that gets sold into or not, because we saw a lot of selling come in from FIIs, from DIIs, even in the F&O market. There was almost 400 crores of selling by FIIs, 200 crores by DIIs. And I take your point entirely about, the Donald Trump tweets. A lot of people now believe that this will end diplomatically. I mean, we saw Caterpillar, Harley Davidson, all of them recover quite a bit. Those were stocks that had fallen post that tariff war comment. But Anuj, morning, what's the sense you're getting? Even if we do see a bit of a recovery in the morning trade, given the condition of the market, is there a high probability of it getting sold into?
Morning, Sonia. Before that, I made this point yesterday that the Bank Nifty would actually rally intraday because you are so close to the 200-day moving average. Yeah. And the first defense of 200-day moving average is normally successful. My base case is that you have a gap up, of course, which is quite visible. But our market right now has a problem of its own. It's not as simple as just looking at the Dow and saying that, okay, if Dow is down 300, we will be down 300. That correlation is long broken. So the initial gap up is likely to be sold into. But if that selling does not take us below yesterday's low, in that case, you'll have a second round of rally, which is more sustainable. So today, the better trade would be to just observe the initial gap up and see if that's getting sold into. At what point does that start to reverse again? Because if low is held, then the second round of rally can be sharp and vicious because there are shorts in the system. Yesterday, the FI selling intensified in the F&O market. In fact, they sold about 1,500 crores in index futures, unwound 5,500 longs and added 13,000 shorts.
So yesterday's low was 10,320 around, right?
on the Nifty, okay, and 24,682 on the Bank Nifty. What you will see now is a bit of a short covering bounce perhaps today because most markets are up. But this is that correction in which ultimately the market should break the 200-day moving average. Does not necessarily mean that the bull market is over. It still means a bull market correction. But the low of 10,276 that will be tested again just to see if that is the real bottom or not. That will not happen today, of course. Today is a day where once this initial selling is absorbed after the gap up, you want to buy and you want to try out that buy trade because once again you're very close to support marks. You're very close to 200-day moving average on the Bank Nifty. You're very close to the recent lows on the Nifty. So that's why you still want to buy. But the way selling resumed in large cap stocks like Reliance, ITC, Larsen and Toubro yesterday, and the FIs are selling obviously. So at higher level, the FI selling would be higher. If you're selling a stock at 1,700, logic would mean that you'll sell it at 1,720 as well. So that selling would be there. So just to cut a long story short, for today, after a minor gap up, perhaps there is a bit of a selling. But if yesterday's low is held, then a more sustainable rally is possible in the second half of the day.
Okay. So
okay. Well, no, one will look forward for those contours.
Those levels, yeah. Yesterday's low of 10,323 is what we're watching out for. But let's kickstart the show on that note and tell you what our wise experts have to say as we head into trade this morning. Johanna Chua of Citi writes that President Trump's announcement of trade tariffs hit equity market sentiment at a time when investors were already nervous, even though he only confirmed widely held market fears. Meanwhile, she says economic data from across the world was mostly robust, confirming implying that the business cycle remains intact. She says Citi views the risk from US trade tariffs as quite limited at this stage, but the nature of retaliation from trading partners is important. She says most Asian policymakers are likely to continue to prefer a targeted but expanded response that limits spillovers.
Okay, with that, some money market views as well. Bhaskar Pand of HDFC Bank says the Eurozone had both positive and negative news in the same day. Germany, the coalition hopes and the hung Italian elections. That has pushed up the dollar index, but just a wee bit. On the domestic front, he says the USD-INR pair is expected to trade in a range of 64.95, 65.50. Basically, flatty for the currency, he thinks.
Okay, and on the bonds, he says the 10-year benchmark bond yield has been trading in a tight range and he expects the range-bound trade to continue. He sees a range of 7.75 to 7.80% today.
Okay, over to Nigel then for the world view.
Well, the U.S. market staged a big recovery yesterday and today. In fact, we had the Dow that ended with a gain of more than 330 points. Things look quite good. That's on the back of some commentary that came in from Donald Trump. In fact, it was a tweet. He said that, in fact, the tariffs on steel as well as aluminium, those tariffs may not come about if there is the NAFTA agreement is renegotiated and is signed. So we'll keep an eye out on that. So worries really of a potential tariff war, that waned off. That was pretty good news. And in fact, it appeared that Donald Trump has opened the door to some negotiations as well. And that's what led to the big hike in yesterday's trading session. The top performer on the Dow was Caterpillar. That, in fact, was up close to around 3%. And Harley-Davidson, that's been the stock that's been under pressure in the last couple of days. That did well, telling you that the market believed that there was some room for renegotiation. In terms of the European markets, well, all those three frontliners did very, very well. So the CAC, DAX and FTSE, they ended with gains of around 0.5% to around 1.5%. But the Italian index, that was a relative underperformer on the back of political instability. Well, some of those automakers, they were under some pressure because maybe, in fact, this tariff war will spill into the auto names. So some of these stocks, they ended virtually at the low point of the day, ending in the red. Asian markets looking good this morning. All the markets were doing well. Only the Shanghai market was under some pressure. That was mildly in the red. But the SGX Nifty is indicating a positive start. Back to you.
Okay, thanks a lot for that, Nigel. So a positive start is what we're going to get. But let's see how it progresses from there. President Donald Trump has been ruffling a lot of feathers. His decision to impose tariffs on steel and aluminium imports sparked fears of a harmful global trade war. Here's Kenneth Rogoff in an exclusive conversation with CNBC on what he makes of this and the impact that this would have on the U.S. economy. We'll come back.
I tend to think we will see a version of this tariff, but I'm not sure that there's more to follow. He has to do it for his base. And let's not forget, if Bernie Sanders were president and possibly the next Democrat, if there's a Democratic American president, they're going to want a very similar thing. Their base is screaming for it. So we're going to get it, but I don't necessarily think it's going to turn into a trade war. It's quantitatively not that big in the United States. The tariff numbers can have a tiny, tiny effect on inflation because it's very small. The impact on the U.S. economy is small. What is going to have an impact is that global growth is returning, unemployment's very low, and of course we have a pretty big fiscal stimulus in the U.S. I don't necessarily know that we're going to have inflation coming back in a big way, but I do think it's going to climb north of 2%. And possibly even get to 3% at some point within the next 12 or 18 months. The Fed will raise interest rates, but they're very cautious about going too fast because they don't know what they're going to do if there's a recession. So I do see inflation going up, and that's going to create some volatility. I don't see it skyrocketing.
It's looking pretty good, actually, for most markets. The U.S. market closed in the green. The SGX Nifty is indicating a start in the green as well. But our market has been volatile, so let's see which way it goes. Our research team is here to give you the list of top 10 stocks to watch as we head into trade this morning. Anuj, what are you looking at?
So first is BEML. We spoke about it in closing bell as well yesterday. It was a case of a bit of irresponsible reporting as well. It rallied yesterday on news of that stake sale, but there was nothing new. It just the status was being read about BEML that the government has approved an in-principle approval of stake sale. But the issue here is that Karnataka government has to approve it, and that's not happening anytime because you have state elections coming up in Karnataka. So my sense is this stock, this rally should be sold into in BEML. HDFC is the other stock that I'm watching out for. It broke the 20 DMA earlier, broke 50 DMA yesterday, consistently seeing delivery-based selling, and ties in with this large FIS selling that you're seeing for many days now. Large part of this is around the HDFC twins. There is some incremental selling which is happening. And one stock on the green side is Voltas. It has a macro trigger because of that summers and scorching summer. Has seen consistent buying for last many days now. So that would be the other stock to watch.
Okay. Well, one up, two down. Okay. Well, when we get up in the morning, we all brush our teeth. But Ekta checks the US FDA website. So we go to Ekta now. Ekta on Sun Pharma, what's the latest? Are the observations enough to topple the stock?
Well, Lata, the street is still interpreting the observations. There have been many examples in the past where there have been only 2 to 3 observations for a company which already has an outstanding warning letter. And I want to bring up Dr. Reddy's Srikakulam API plant. It was only 2 observations that they received in a re-inspection which had taken place, but they have still not got clearance from the US FDA. That's because there is probably some work still kept. So you can't put 2 and 2 together and say that just because you've got 3 observations and just because I think it looks benign means that it'll get clearance. We don't know what the US FDA is going to, what the Sun Pharma management is going to reply with regards to these observations.
Are they serious?
See, it's related to aseptic processing as well as, written procedures. Now, I've spoken to a couple of industry people and they're not related to the analyst community. They've said that, these kind of observations will probably take some time to remediate at this point. It's not going to be something that will be cleared overnight, like say, for example, the Moraiya plant, which had received 0 observations. So while the remediation will take some time, it's not that it probably won't get cleared. Now, it will obviously depend on how the Sun Pharma management replies to the Halol plant. But if net, if you want to say whether it's better than the previous inspections, where they had received 120 observations, which resulted in a warning letter, and then 9 observations which did not get cleared and resulted in this re-inspection, then yes, they're better placed.
Okay, well, let's see how the street reacts to that. For now, the stock, of course, has been in a bear market of its own. It eroded a lot of wealth over the last 1 to 2 years. But I think Ekta also wakes up, brushes her teeth, and then checks the US FDA, I'm sure, like everyone else, right? Thanks for that, Ekta. But let's move on to a CNBC TV18 exclusive. Steel major JSW Steel has signed an MOU to acquire Italy's second largest steel maker, FRP. Kritika Saxena joins in now to give us more details on what she's picking up. Hi, Kritika. Good morning.
Good morning, Sonia. So, JSW has actually been second time lucky. This company was called Ilva about 4 years ago. They tried to bid for it, didn't work out, and now they have actually emerged the front runner. They have signed an MOU yesterday. There was a board meeting yesterday of FRP, and an MOU has been signed. What that essentially means is that they now enter the final stage of discussion, and in another two to 3 days of the required nods and required government approvals from Italy, they are going to be announcing this as well. So just to give you an idea about FRP, it's interesting for JSW. It's about 2.5 million tons of capacity that they have. It's Italy's second largest steel maker. So in terms of the kind of capacity that they need to expand their international operations, this definitely would be an interesting buyout. The value is just about is between 580 to 600 crore rupees. So even in terms of the expenditure, it's not as heavy as how much they will have to spend to buy domestic companies.
Absolutely. We are talking about 45,000 crores here, aren't we? Thank you very much. Kritika, a small buy by JSW Steel from Italy, if all goes well. Nigel, why are you watching Ramco?
Well, Lata, Ramco Industries and Ramco Cement, they're looking at streamlining their operations. So Ramco Industries, basically, they had a clinker grinding unit. Now, that unit is going to be transferred to Ramco Cements for around 17 crores. Importantly, the capacity is small. It's only around 12,000 tons on a per-month basis. And the turnover in the last year was only around 30 crores. But I was looking at a couple of years earlier, it was nearly around 55 crores. So, streamlining of operations, and that's why I expect both the two stocks to do well, Ramco Industries as well as Ramco Cements.
Okay, thanks a lot for that, Nigel. Mangalam, why are you watching out for Britannia?
Well, Anuj, I was speaking to a couple of people in the company yesterday, and they seemed a bit worried about the rise in import duties as far as refined palm oil is concerned. Remember, that is an important input for the company. Basis that, what they've done is increase their input cost inflation estimate from 3.5% to 5.5%. Import duties on palm oil have been increased from 7% odd just a year back to all the way up to 48.5% just last week. So that is a bit of concern as far as their input cost is concerned. We'll watch out for the gross margins. Not sure if the company will really pass this through going forward. So the gross margins may be under a tad bit of pressure, but not cannot be ascertained what kind of impact it will have on the EBITDA, because that is also a function of the company's cost savings as well as product mix. So that is something we'll watch out for. The reason why I say a tinge of red is because the stock is at a record high. And secondly, a lot of the brokerages based their estimates on stable input cost prices, and that going up causes a bit of a speed breaker in the company's margin tailwinds going forward.
Okay, thank you very much. That's positive, Britannia. Well, let's get you an interesting tweet that we picked up. Watch for Adani Power this morning. MP Subramaniam Swamy has tweeted, and I'm quoting, "The biggest NPA trapeze artist in PSUs is Gautam Adani. It is time he is made accountable, or a PIL, that is a public interest litigation, is inevitable." End of quote. This is a tweet that's just hitting the Twitter attire, and therefore you should expect that Adani Power, which is one of the companies with the largest loan exposure to PSU banks, could have a problem.
Okay, we'll keep an eye out on that stock this morning. Let's move on. Manisha Gupta joins in to tell us what's the latest in the metal market. More importantly, what's happening with Hindustan Zinc. Manisha?
Oh, well, absolutely. You know, zinc has been on a tear, the prices that is, and in last 2 years, you have seen the prices double up. But that really seems to be turning around right now. We did see a 10-year highs in the previous month itself, but the prices have come off 8% since then. And yesterday, overnight, you have seen the zinc prices decline quite sharply. The long positions have been cut. We actually hear that the short positions have been created here as well. The inventories have now risen to the highest since December. And yesterday was a single one-day increase in arrivals in warehouses that you have seen since July 2013. Also, if you look at the numbers of refined zinc imports into China in last 3 months, that has been on the huge side as well. So from 3 years of deficit, suddenly when you look at inventories increasing, that is going to put some pressure onto the prices. So zinc is down 2% overnight, and that would impact Hindustan Zinc prices as well as we open trade.
Okay, Manisha, thanks a lot for that. Staying with metals then, Nigel, steel stocks?
Well, last few days, a lot of sales notes as well have been coming out that expect a price increase coming in the month of March of around 1,000 rupees, and that's precisely what's happened. BofA ML, they've come out with the note. They're saying 1,000 rupee price hike is what they've seen in the domestic markets. They're saying that year to date, in fact, it's up by nearly around 11%. And despite all these price increases, still domestic prices are at a bit of a discount in comparison to international prices. But importantly, I think the steel stocks will do well on the back of commentary that came in from Donald Trump overnight. He said that, you know, there could be some scope of negotiations, and that's why, in fact, those stocks could bounce back today.
All right. Thank you very much. Positive for steel as well, though not for zinc. Anisha, why are you watching stocks like DLF and HDIL? Some news?
Well, yes, I'll come to DLF and HDL in the end. But to begin with, Reliance Communication is on the radar and expect that stock to be in red today, given the arbitration court has barred the company from selling assets. We understand that the minority shareholders had raised some concern, and that's the reason the arbitration tribunal or the court has asked them not to sell any of their assets. Bharat Wire Rope is also in focus, given the fact that the board is going to meet on March 9 to raise funds. They are going to raise funds via maybe QIP, FPO, private placement, right issue, etc. The decision will be out on March 9th. But they expect the stock to be in green today. Fortis Healthcare, where the Singh family control has dropped to now around 0.14%. That stock has perennially remained in focus over the last few months. Expect that to be the case today as well. Liquor stocks like Global Spirits will be in focus, given the fact that the excise duty has been hiked on country liquor and IMFL in Haryana state. For country liquor, it has been increased from 28 to around 44, and there has been a 5 to 10 rupee increase even for the foreign liquor as well. Lastly, as you were mentioning, DLF and HDL will be in focus, because we understand from reports that land prices around the Delhi-Jaipur expressway have gone up by around 40%. The reason is that there's this proposed highway which is expected to come out sooner, and that's the reason we are seeing the land around that expressway going higher, and that's the reason perhaps DLFL and HDL and the other constructors around that area stand to gain. Back to you.
Okay, thanks a lot for that. So let's do a quick wind-up of what we spoke about in the last 10 minutes. Top stocks to watch expected to gain are names like Voltas, Ramco Industries, Ramco Cement, Tata Steel, SIG, SAIL, JSW Steel, JSPL and Bharat Wire Ropes. While stocks expected to be under pressure today, HDFC, Sun Pharma, BEML, Hindustan Zinc, Britannia, Adani Power, Reliance Communication, Fortis Health and Global Spirits.